between 600 to 700,000, the 3x1s, have opportunities to move into the 800s and the 900s in maybe 3 or 4 years. Emu, Glenelg, Mount Pleasant, they have really good own-occupier appeal. If you look at the other suburbs in Townsville, the reason why they weren't shortlisted is it's going to be very hard to find a house which is away from flooding, because can we still buy in Queensland and WA? Over the past few years, both these states have had massive rise in the housing prices, mainly because of government spending, new jobs, and the local economy performing really well, together with a lack of housing supply. This has resulted in areas booming by more than 100% in Queensland and WA property markets. So the question is there still value there? And more importantly, where should we buy if we were still going to buy in Queensland and WA? Where can we buy where we can still see some good price uplift and make a good return on our investment? So that's what this video is all about. And I'm going to go into exact suburbs where you can still find good opportunities. Hi, for those of you who don't know me, my name is Jadhu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then go to my website, propertyframeworkbuyersagency.com.au, and book a session with me there. Now, in Queensland and WA, it's really hard to find properties under that 500,000 anymore. So even if you find something at around 500 to 550,000, bear in mind that this property maybe 2 or 3 years ago would have just been around 200 to 250,000. So it's doubled in value, or in some cases more than doubled in value over a short time frame. So these suburbs which are now at 500 or 550,000 usually kind of lower social suburbs where affordability is stretched. Okay, because they've just doubled in value and property prices have risen very sharply over a short time frame. So instead of going and looking at 500 to 550,000 suburbs, if you really want to find value in regional Queensland or WA, I would suggest going higher and looking at the 650 to 700,000 price range, because that's where there are still some opportunities left, because that's where the affordability is better, there is strong own-occupier demand, and you can have some consistent growth ahead. So we're going to deep dive into some of those suburbs and where I think there's still opportunities in Queensland and in WA. So let's get right into it. So first, let me start off with the shortlisting criteria. So I'm mainly looking at price point under 700,000. Okay, and the key thing here is I'm only going to look at suburbs that have grown by less than 60% over the last 3 years. So I don't want to go into suburbs that have done 80, 100% or even 120% over the last 3 years, because they've just done too much. So we're only looking at these type of suburbs where the vacancy rate is under 3%. So I know that, it's not flooded with investors, and I know this market is still healthy from a rental perspective. And of course, areas where the renter percentage is under 40%. So I'm looking at own occupier suburbs where, families want to live. Those are the type of suburbs that I'm looking at. So I'm using hashtag. Hashtag was the platform that I used to shortlist the suburbs, and this was the criteria. So let's start off with Queensland. Which areas in Queensland do I think still have value? The first one is Cairns. So in Cairns, the platform shortlisted 6 suburbs, and I think all of them, the verdict here is a pass, all of them pass. I think all of them are good. So we are looking at suburbs like Edmonton, Bentley Park, Gordon Vale, Mount Sheridan, Bayview Heights and Brinsmead. You can find a 3x1 here between 600,000 to 700,000. As you can see here, 3-year growth is under 50% in all these suburbs. 10-year growth is around, some of them it's around 59%, for some it's 106%. But the key thing is this, right? The affordability. So the affordability is just under 30 years, which is very healthy. So when you have prices sitting at 600,000, 700,000, and you have affordability just under 30 years, that is really healthy. And you can see the social scores here. So when I'm looking at these social scores, a score of 1 represents a very low social area, and a score of 10 represents a really really high socio area. So we do have some really good areas here, like 5, 7, 8, even 3 is considered pretty good, right, from a socio-economic perspective. And at these price point, I think 3 is considered really good. So when you have these healthy social scores and you have healthy affordability, despite the fact that it's done this level of growth, I think there's still more room for price movement here, because the affordability is good. Own occupiers like this area. There's still a housing shortage in these markets, and there are big projects coming into Cairns, like there is 800 or a 900 million hospital upgrade. There's a Bruce Highway upgrade, so a lot of transport infrastructure going in. So all of this together mean that these kind of suburbs, sitting at between 600 to 700,000, the 3x1s, have opportunities to move into the 800s and the 900s in maybe 3 or 4 years. So they're still good investments. You get fairly good rental yields as well. So Cairns, the rental yield isn't too bad. Only thing you have to be mindful of is that there's a bit of flooding, so be aware of that. Insurance costs are higher, so you have to take note of that as well. But these type of suburbs, they're still going to be pretty decent. Let me share an example with you in Mount Sheridan. So this is a property which is on a 709 meter square block. So pretty much a low maintenance house. Everything looks pretty okay. This property sold for 667,500 on the 7th of October. It's a 3x2, 709 meters squared. Something like this. It has a second bathroom as well. Probably rent out for around maybe $600 per week. So pretty healthy rental yields as well. So this is what I would be looking at. Right now, let's move to the next area. In Townsville, only one area was showing up, and that is Annandale, and I think Annandale gets a pass there. So when I say one area is showing up, it's just based off this criteria. We're just looking at this criteria and then looking at which suburbs are showing up. So only Annandale shows up, and I think this definitely gets a pass because it's got a really high socio score of 8. Affordability is under 30 years despite having, a price of 714,000 median price. And as you can see here, last 1 year it's done 18%, last 3 years 56%, and the renter owner ratio, so only 24% renters. It's predominantly an own occupier suburb, so families kind of like this suburb, and I think a suburb like this does have good potential. Vacancy rate is only 2.66%, so this one does have potential to move up. If you look at the type of stock you can find in Annandale, this one recently sold 3x1 for 690,000. You can get good quality houses like Glosset, good quality houses, brick homes like this in Annandale. This one has a pool as well. This is fully renovated. A family would like to live in a house like this. Annandale just does get a tick. It is definitely a pass. If you look at the other suburbs in town, so the reason why they weren't shortlisted is because the 3-year growth was just too high, because the affordability was also stretched. We saw that the renter-owner ratios were just too high, and vacancy rates were also too high. So those were the reasons why the other suburbs weren't included. But a suburb like Annandale here, I think this gets a pass. Now the next one is Mackay. So the suburbs showing up in Mackay, we have North, West and South Mackay, and then we have Amio, Glenella, Mount Pleasant, and then we have Beaconsfield. Now all of them do get a pass, okay, but there's a bit of a caveat. I'll just explain that in a while. Now one of the things that you have to take note, let's take North, West and South Mackay. You can find properties here, around that 550 to 650. West Mackay has a social score of 4. The affordability looks pretty good. So all of that does pass. Okay, one of the biggest problems here with North, West and South Mackay is the flooding. Like most parts of these suburbs flood. So it's going to be very hard to find a house which is away from flooding because, as I said, like most of the suburb does go under that flood. So I would tend to avoid these suburbs or make sure that I buy a property that's completely free from floods. Amio, Glenella, Mount Pleasant, these are outer suburbs in Mackay, but they do not flood at all. They have really good own occupier appeal, and you can see here social scores are really high here. Amio, Glenella, Mount Pleasant 785, 23%, 27 years and 31 years. So 27 years affordability, 31 years affordability, so it's all under 30 years. So these 3 suburbs, really good affordability, really good social scores at this price point. I would think if you can get a 3x1 in these suburbs, they would still continue to do well because the rental yields in these suburbs are really, really good. And so is Beaconsfield. But of course, the social score is slightly lower as compared to these suburbs. So my top picks for Mackay would be Amio, Glenella and Mount Pleasant. Now, just to give you an idea of the type of stock we can find in North Mackay, so as I was saying, we're going to find pretty much weatherboard homes like this. Okay, we're not going to find a low-set brick. So if you're after a low-set brick, low-maintenance home, you'll not find it, or it'll be very hard to find it in North, West, or South Mackay. Okay, so this is the type of house that you would typically find there, around 531,000. This is a 3x2. You'll have a healthy rental yield. I'm pretty sure this will rent out for around $580 to $600 per week, but I'm not sure if this is in a flood zone. So it may not be in a flood zone. I'll have to check, but bear in mind that North Mackay does flood to some extent. And then we have the other one in Amio. So this is one of the recommended suburbs. So you can see 665,000. You got a 4x2. Okay, and this is a low maintenance home. It'll probably rent out for $700 to $750 per week in this market, and vacancy rates are pretty tight. So you should be able to find a tenant easily for this. If you go back to this chart here, Amio has a score of 7 and affordability of 23, but housing prices, if you can still find something at 650, that is excellent. I think in the next few years, these suburbs still have the opportunity to move up in value given these affordabilities and social scores. This is going to move up because the type of housing stock is also really good. That's an important point. We find really good quality houses in these three suburbs, like big, low maintenance, renovated houses, which really should be sitting close to 1 million. So that's why. So that I think there's still opportunity here in these suburbs to move up. Okay, so let me explain the caveat. I've put this in orange, not a green, because as you know, Mackay is the local economy isn't as diversified. It is slightly reliant on coal mining to some extent, and therefore as a long-term investment, 15, 20 years, there might be some fluctuations because of that. Of course, Mackay has changed from the last few years, but of course you still have to keep in the back of your mind that this is not as diversified as maybe like a Townsville or a Cairns. Again, let's move to the next area, which is Gladstone. So only two areas are popping up in Gladstone. One is Tannum Sands and Boyne Island. The reason I'm picking them is higher social scores, good affordability, and again, it's in yellow. It's given a pass, but it's in yellow because, again, the same factor as Mackay, the economy is not as diversified. But Tannum Sands is a pretty good area. It is a bit of a lifestyle location as well, and you can still find properties here under 700,000 with this score and this affordability. So these areas can move up in value. Let's look at an example in Tannum Sands. So this one sold at 630,000, 4x2, just perfect low maintenance brick home. So good quality housing stock again in Tannum Sands, which allows for good price movements as well. Let's move on to the next area. So this is the Wide Bay region. So we are mainly talking about areas like Gympie, Maryborough, Bundaberg, Kingaroy. These are the suburbs that we are looking at. Now, the platform gave me all these suburbs here, but all of them, while they meet the initial criteria, they're going to fail the affordability criteria, because even though you can find properties here even in the 500s, the affordability here is already stretched. The social scores are quite low. So I'm talking about Southside, Gympie, Maryborough, Avenel Heights, Awaka, Bundaberg North, Tinana. The social scores are low, and therefore I'm going to give this a fail. At this price point, I would want to see better ERSAT scores, better affordability scores. So it's a fail. Walkaway and Kingaroy. So this is in Bundaberg. This is in Kingaroy. This one just gets a pass because the affordability it's a bit healthy. I'll put a pass in orange here because the ERSAT score is not as high, still quite low. But because the affordability is still healthy, I think they're still not too bad. But of course, these won't be my first options. So they can be something that you can consider, but it probably wouldn't be my first option. Just to give you an idea of the housing stock in Kingaroy, where you can find properties under 500,000. Again, you might not find good quality homes. You can see this is a very tired looking weatherboard home, just under 500,000. So this is the type of stock that you will find in Kingaroy under 500,000. So that gives you an idea of the Wide Bay region, which is covering Gympie, Maryborough and Kingaroy. So I'm only going to recommend a couple of suburbs there. Now let's move to Toowoomba. In Toowoomba, there's only 3 suburbs that came up, Harriston and Wilsonton. They automatically fail because the affordability again is stretched at $654,000, $620,000, and they're pretty lower social areas. The only suburb that gives a pass from me is Centenary Heights. That's because the affordability is slightly higher, 38, but the social score is pretty healthy at 4. So I think this suburb does has potential. So I've kept this as a green, and this one gets a pass. And Toowoomba, the economy economy is fairly diversified, very proximity to Brisbane. So I think this one would do fairly well as well in the coming years. And you have a very healthy renter to owner occupier ratio as well, with vacancy rate sitting at 1.78. So very tight market. I think Century Heights is a decent pick in Toowoomba. Let's look at the next one. I'm going to the only suburb in the Greater Brisbane region, so Ipswich. The only one that comes up under 700,000 is East Ipswich, where you can still find properties around that 650,000. Affordability is not too bad. Rent-to-owner ratio is decent. ERSAT score is not as high as we'd like to see, but it's sitting at 2 years. It does get a pass, but I've put in an orange here, mainly because parts of East Ipswich do flood, so we'll have to be careful of that, and the housing stock that we find in East Ipswich. So at 650,000, you're going to find this is the type of stock that you're going to find. So older homes, very tired looking older homes, weatherboard homes predominantly. They don't have as many low set brick homes in East Ipswich. So we're looking at this kind of housing stock. So if you're someone who wants a low maintenance kind of property, then East Ipswich is definitely not going to be a good area for you. We've covered Queensland. Now I want to go into move into Western Australia, and the only region that stands out here is Geraldton in Western Australia. So I've got two suburbs here. One is Mount Tarcoola, the other one is Wandina, and these are really, both of them are really popular suburbs in Geraldton, very desirable. Of course, the median prices here 629, 676. Of course, in Mount Tarcoola, you can still buy 3x1s under 600,000. And you can see here, social scores are really good. Affordability is really good. Our rent-to-owner ratios are really good. And then you can see they haven't had much 10-year growths as well. You can see 65%, 54%. As compared to the other suburbs, these haven't really gone up really fast. Of course, Mount Tarcoola has done 100% growth over the last 5 years, but bear in mind that this is Western Australia. Between 2014 to 2019, there was a price decline, and that's why the 10-year growth isn't that high. So I think these areas do have further potential. You can get healthy rental yields as well in areas like this. Let me show an example of what you can buy in Mount Tarcoola. So this one sold for 550,000, a 3x1. It'll probably rent out for around 520 per week. You can see low quality brick home. You can find good quality homes here. Mount Tarcoola is a pretty popular pocket in Geraldton. So if you're after low maintenance brick houses, even an area like Geraldton, these two suburbs are pretty decent. So I couldn't really find any suburbs in Perth that were meeting the criteria. So Perth was not included. It was only these two suburbs that kind of met what we were looking at. So that's pretty much it. I've only shortlisted suburb I think has potential to move up. So if you're going to buy in Queensland and WA, right, you got to be very selective about which suburbs you're getting into. I would strongly recommend buying into areas which have good affordability, good owner-occupier appeal, because these are the ones that are consistently going to perform. So be very selective about the suburb you choose. So that's it from me. I hope you found some value in this video. I'll see you again in my next video.